Alright, here we are with another market recap. Once again, we haven't taken a trade. That's 2 weeks now where we haven't taken a trade. But it's fine because next week, we're hoping for next week. Alright, so market open. Today was a bit of a different one because price came down and swept these lows previous to market opening, and it also created a bullish SMT. Nasdaq swept these two lows and ES didn't sweep any of them, creating that bullish SMT. So we were looking for longs off that and off this sweep. Since market swept these lows before the US market opened, we have to wait for a 5 minute what's it called, a 5 minute sweep as well, because when US market opens, a lot of new money is coming into the market, and we can't just base it off this hourly liquidity sweep. We have to wait for a 5 minute sweep as well before we can look for the break of structure, fair value gap, etc. So we see that does happen. Off market open, we sweep these 5 minute lows, these ones and these ones, come down, sweep them out, and then we just get a massive bullish candle, breaking structure instantly, the second 5 minute candle of the day, and then it just pumps for ages without any retracement. We get a fair value gap here, fair value gap there, and then there's a little one right here that gets inversed instantly. So ideally, price comes into this fair value gap or even this one for us to pump longer and take out these hourly highs. It ends up taking out. However, on Nasdaq, it didn't even come into this second one here. But over here on ES, it only creates the one fair value gap. Same thing happens, market opens, sweep these 5 minute lows, these ones and these ones, and then pumps up, breaks structure on this 5 minute candle here, creates this 5 minute fair value gap, which gets retraced into really nicely. So today would have been a good day to take the trade on ES. So it comes down to the 5 minute fair value gap. We can go down to the 1 minute, look at it here, and then you get nice bullish price movement out, break structure here. If I were to take a trade today, I would enter right here, just above this candle, and then stops would either be behind here, or ideally you normally would put your stops behind here, but because it's had such a big push and such a massive push up without any retracement back into this area down here, or even equilibrium, nowhere near equilibrium. So I was hoping it would retrace further to give us a better entry opportunity and a better price range from this move up, but it didn't. And if we entered here, stops behind here, we would have been able to hit full take profits at these highs. But as I was saying, I didn't really like how high up this fair value gap was. It wasn't really in a discounted price range, which would be below equilibrium, like this one was on Nasdaq. So really I was hoping for it to come down to this one, and then we get this bullish movement to take out these highs. But that didn't play out, so we didn't take a trade today. That's 2 weeks now with no trades. But one thing you gotta learn is less is more when it comes to trading. Like, when you realize that, when I first started out, I'd take like multiple trades each night. Some would all be winners, some would all be losers, and then the losers always outweighed the winning ones. So once you learn less is more in trading, and your trade setup isn't going to happen every single day. In my case, it hasn't happened for 2 weeks. well, it happened here, but I didn't like how it played out, so I stayed off, sat on my hands, didn't place any trades, staying out of the charts. When you get more experience, you learn that the long, the more days you can stay out of the charts equals the less money you're risking. So hopefully next week we get some nice A plus setups that we can make some good money on. And yeah, subscribe, comment, let me know where you are in your trading journey, and follow the Instagram, TikTok, and Twitch for daily live streams of Market Open.